Hey fellow stock guardians, it's Tuesday, May 11th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a red stock market for the second day in a row. I looked at the stock market indices movements, researched why Roblox jumped more than 20%, and discussed what to do if a stock you own has lost nearly half of its value. All three indices finished the day in the red, although the Nasdaq index almost made it into the green zone. The reason behind the sell-off is the familiar story we have been discussing for a while. Investors are worried about a higher inflation rate and a higher 10-year treasury yield. Therefore, the market is struggling to maintain its previous momentum. From the list of companies reporting their earnings on Monday, shares of Roblox popped up more than 20%. This is a new direct listing company that allows anyone to create a video game. It's a popular platform among teenagers and just put outstanding results in its first quarterly earnings report. Revenue was up by more than 140% in Q1, quarter over quarter. Moreover, the company's costs across four major cost categories grew slower than the revenue growth, signifying that Roblox's growing scale may result in higher operational efficiency. However, I plan to stay away from Roblox for a few more months, not because I don't believe this is a well-run company in a growing industry. Instead, because I think the company should soon experience a slower revenue and user growth. Like most entertainment companies, Roblox benefited from kids and adults staying more hours indoors. If we've learned anything from quarterly earning reports of social media companies we discussed yesterday, they all suffer from a slower growth in the upcoming quarters. There is no reason to believe Roblox would be any different. However, despite the fact that during the earnings report, the leadership team mentioned that April's bookings are up 7 to 9% compared with March, which investors interpreted as a good sign, I would rather have Roblox on my watch list for 2021 for at least one more quarter before jumping in. I added a company to our future food portfolio a while ago called the A2 Milk. It's a company from New Zealand that sells baby formula mainly to China and new alternative milk that lacks casein protein in the US. Alternative milk is one of those rising trends, especially in the United States market. And I invested in this stock amidst the COVID-19 pandemic, assuming the company has already seen the worst. Since picking the stock, it's down another 45 to 50%. The question is whether to add more or sell and cut the loss now. The company's baby formula brand in China has had a challenging year, losing revenue amidst tension with its Chinese reseller. This week, the company announced that its head of Asia Pacific has resigned for those reasons, and it had to get rid of $90 million in out-of-date product inventory. Investors are rightfully worried that the A2 Milk has a few problematic quarters before getting back to its growing revenue. So what should other long-term investors and I do? My original hypothesis was to invest in the future of alternative milk, which is still valid. However, the company's primary revenue source is the baby formula business in China, which is struggling and could impact its ability to grow its alternative milk business in the US. One more important data point is the current negative sentiment about the stock, as you may see on the company's stock card. Even if I decide to sell, it's the worst time to sell now because of the highly negative sentiment right after the recent press release. I'm not ready to add more considering the challenges in China, but I'm not ready to sell either. I plan to hold for at least another quarter to see how the company manages to recover from the recent challenges and let the market sentiment to calm down. I hope sharing this update could be helpful to you. if the stocks you own have lost more than half of their value. That's it for today. If you haven't already done so, please give a stock card a try. Research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the stock pick page on the stock card platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And as always, if you like these daily market recap reports show, please like, subscribe, and share with your fellow investors. I'll see you tomorrow.